What's going on, my fellow wealth creators? Matty Ice here. In this video, I want to answer the question, what is infinite banking, in my own way, to keep it really, really simple, because I think there's a lot of very misleading information out there about infinite banking, which is unfortunate because it can be a very powerful financial strategy. And so to answer this question, I'm going to propose a question to you. If there was a bank that offered you a savings account that was going to pay you 4% uninterrupted tax-free compound growth for the rest of your life, and would even allow you to use the money in the account to make investments and build wealth like you normally would without interrupting that compound growth. And on top of that, it would also pay out a massive income tax-free death benefit to your loved ones if you passed away unexpectedly. Is that a savings account that you would be interested in? When you put it that way, I think most people would say yes. And that is essentially infinite banking in a nutshell, guys. And I think what happens is, unfortunately, like when people hear the term infinite banking, or even worse, maybe dividend paying cash value whole life insurance. Oh no, not whole life insurance, right? Because you hear the likes of Dave Ramsey and Susie Orman say that whole life insurance is a terrible investment, even though it's not an investment. It is a savings vehicle that we use to implement something like the infinite banking concept, right? But when people hear those terms, because of what they heard about them, then that scares people away. They want nothing to do with it. But when I put it in such a way that I just explained with that savings account, well, now all of a sudden it makes sense, because that savings account example that I just gave you guys, that's infinite banking in a nutshell, if we want to keep it really simple. Okay. And here's basically a breakdown of how it works. So we utilize a custom designed dividend paying cash value whole life insurance set up for high cash value. Did you know you can custom design a whole life policy? Because I've never heard Dave Ramsey or Susie Orman talk about that. They only talk about the traditional 100% base whole life policies that have been sold for a very long time, mostly for like burial expenses and stuff like that. I guess more than that too. But anyways, they never talk about the fact that you can custom design a policy to have access to your money, the majority of your money or your cash value, within the first 30 days. I took my first policy loan on my first policy in 2 weeks, right? And I had access, when I set my two policies up, I had access to roughly about 87% of the money that I put in. That's really good for whole life insurance, right? Did you know you could do that? No. So they only tell one part of the story that's going to promote their narrative. That's the side of the story they tell to promote their narrative. And maybe their narrative, their buy term and invest the difference crap, is good for some people. I'm not saying it's not. But how do you know it is if you don't know what your other options are? If you don't know how infinite banking actually works, or the fact that you can custom design a whole life policy to get all of these incredible benefits and to be able to implement something like infinite banking, if you don't know that's available, how can you make an informed decision, right? So next I want to talk about who is a good fit for infinite banking, okay? First, let's talk about who's not really a good fit. If you are in a lot of debt and you can't save money and you're constantly behind on bills, right? You have a cash flow problem, not really a wealth building problem right now. It's you need to fix your cash flow, right? Lower expenses, increase income. You need to get to a point where you're able to consistently save money. Because if you're not able to consistently save money, that means you're not able to sufficiently capitalize your private banking system, we'll call it, with these policies. You're not able to put enough money into the policies in order to get any real benefit from them. So if you're not able to save money on a regular basis, probably not a good fit for you. But let's say you do save money on a regular basis, but you spend it all. Like, so you make good money or a decent amount of money, whatever. Your income is much higher than your expenses, okay? But you spend most of your money. You're not good at having control of capital, right? You spend all the money on vacations and fancy cars and fancy clothes and stuff like that. Nothing necessarily wrong with that stuff. But if you do it in excess and you consistently go through your savings, this is, infinite banking is probably not a good fit for you either, right? You need to be disciplined. You need to be responsible, because even though this is we're utilizing a very risk-free asset, dividend paying whole life insurance, there is risk to it, and you are the risk. It's like how if you mismanage your policy and you don't utilize infinite banking correctly, you can get into some trouble. There can be some pretty bad financial consequences, right? So you have to be good with capital as well. You have to be good with the money that you're saving. So that's who it's not really a good fit for. Let's talk about who infinite banking is a good fit for. Definitely business owners. There's a number of different reasons. But if you regularly need financing or funding for your business, taking some of the savings, some of the cash flow that you're getting from the business, funding your own private banking system with these policies can be a really good way to start to finance your own, basically become your own bank at this point, where, and there's a lot of advantages to that. So put aside the tax-free growth, the tax advantages, the safety, the liquidity, or the uninterrupted compound growth, the death benefit. Let's put that aside for a second. And let's focus on why this would really make sense for a business owner, okay? Especially if you need funding on a regular basis. Number one, there's no application at all. There's no real process you have to go through. You don't have to get approved for anything. So if your cash flow is fluctuating a little bit, maybe you take a hit on your credits. Times are tough right now. And maybe getting access to funding is not as easy as it used to be. Even if your credit and cash flow is still good, maybe banks have just created stricter lending requirements, and now it's prohibiting you from getting the funding that you need. Well, if you've funded and capitalized your own private banking system with these policies, well, now you can borrow against the policies to fund whatever it is that you need for your business. If it's a marketing campaign, you're expanding, payroll, whatever it might be. Right, you have access to the cash value in the policies. That's number one. So there's no application process, there's no lending requirements or anything like that. Right, you always have access to your cash value, to whatever amount of cash value you have. Okay, that's number one. Number two is the interest rate. So as I record this right now, interest rates are really high, and I've spoken to a couple of loan brokers in the business that help people with financing, help businesses with financing. Interest rates are pretty high, 10, 11, 12%, where it didn't used to be anything close to that, right? And so the market has changed for getting funding for businesses, okay? How big of an impact would it make in your business if you went from having to pay 10, 11, 12% on the financing that you need, or 8, 9%, whatever, and you're now paying 5.5%? Because that's my current loan rate on my policies right now. If I borrow against my policy, I'm paying 5.5%. So not only did I not have to go through an application process, I didn't. My interest rate is really good, right? And another great example of this is when I purchased my vehicle. Out of curiosity, I wanted to know what my interest rate would be for a car loan, and my credit was pretty good at the time. And the lowest quote that I got was 10%. I think the highest was like 16.5%. I mean, it's pretty crazy, and it's because interest rates are so high right now. And so I'm paying 5.5% on my policy loan. Not to mention it's an unstructured loan because it's collateralized by the death benefit. So even if your business falls on hard times, like your cash flow is fluctuating, and let's say you have a policy loan outstanding, okay, and you can't comfortably make a payment that like this month, for example. No bank is going to be calling you. You're not going to get any letters in the mail. Nobody's going to come to repossess your car or equipment or whatever it is, because the policy loan is already collateralized by the death benefit, right? So there's a lot of flexibility with the repayment of the policy loan. Now, at some point, you do want to pay the policy loan back, okay? But you don't. There's a lot of flexibility on how much you pay. Like, you're in control of it. Okay, you control how much you pay back when, totally up to you. Okay, and again, the only cost to these benefits is the little bit of simple interest that you pay on the policy loan. To me, that is 100% worth it. So business owners, fantastic fit for infinite banking. Real estate investors and lenders, fantastic fit as well. So this is one of the things I was really excited about when I started learning about infinite banking, because I knew I wanted to get into real estate, and I'm not the type of investor that wants to get his hands dirty in the property, fixing and flipping and doing all the marketing for it and selling it and all that stuff. So I decided to go down the route of lending on real estate, because again, I had saved up a good amount of money from my marketing agency. I put that money into my policies first, right? So I get all these benefits. I have the safety. I can't think of a safer place to put money than a mutually owned life insurance company that's been around for over 100 years, that's never missed a dividend payment, even through the Great Depression and all the recessions, all the chaos, the financial chaos throughout the last 150 years. These companies have never missed a dividend payment, right? So safety, number one. I'm going to get that uninterrupted tax-free compound growth, 3 to 5%, depending on how you set up the policy. Every company is a little bit different, right? So my money is going to continue to grow. And then while I access it, because the liquidity is the next benefit, I can borrow against the policy at a very small interest rate and make investments like I normally would, acting like a bank. I'm going to get to that in a second. I have the death benefit, the living benefits. I have all these benefits. So I wanted to take my safe emergency and opportunity money, and I want to put that in the most efficient vehicle possible. Because if you're going to save money for an emergency and put money into an opportunity fund, right? You're saving money. Why not put it in the most efficient place possible where it's going to give you the most benefits? To me, it just made sense. Put it in these whole life policies. All right. So I funded my policies. I've now created my own private banking system. I can now actually implement the infinite banking concept because for me, infinite banking is about accelerating the wealth building process, right? By eliminating lost opportunity costs. We'll get to that in a minute. But also being able to make investments like we normally would, right? So for me, I wanted to lend on real estate. That's how I want to be involved in real estate. Okay. So, because it's a lot more passive. And so what I did was I borrowed against my policy at 5.5% and I lent it out at 12% plus points. Okay. So I'm creating positive arbitrage there. That's another very important thing to understand about infinite banking. We're not trying to create positive arbitrage within the policy. Like I borrow at 5.5%, but I make 6. We're not worried about that. We're not trying to do that crap. Okay. Don't listen to that stuff. We create the positive arbitrage with the investments that we make from the policy. Okay. At least in my opinion, anyways. That's how I think about it. So I borrow at 5.5%. I lend it out at 12. I'm now literally doing the same exact thing that banks do, guys. When banks pay us 1% on our savings account, historically lower than that. So that's a cost of doing business to them, to the bank. But what do they do with our money? They now take it and lend it out at 4 to 5%, right? So is the bank stupid for paying 1% to us, the depositors, to keep money in the bank so that they now have access to our money to lend out at 4 to 5%? I don't think they're stupid. That's why they have the nicest buildings in every city across the world. They're the most profitable companies in the world. They know what they're doing, right? Do you really think they're complaining about the 1% they pay us? Nope. Because they're making hundreds and hundreds of percent return when they lend our money out at 4 to 5%. Okay. They're not making 3 or 4%, guys. They're making 3, 4, 500%. Okay. When you actually break down the numbers. All right. So all I'm doing is mimicking exactly what a bank does, except the difference here is my money is still continuing to compound and get that uninterrupted tax-free compound growth in my policy. The only cost to doing that is the little bit of simple interest that I pay on the policy loan. It's the cost of doing business, just like it is for the banks to pay us 1% on our savings account. It's literally no different. So if you agree that banks are pretty darn profitable, I think they're pretty smart. They're reckless and stupid. I don't like banks, but still, we can't deny that they are incredibly profitable. And that is a major reason why, because they pay us 1%, lend it out at 5. So for real estate investors, it can be phenomenal, especially also too, if you're doing a good amount of deals. And again, just like regular business, you need funding, right? You need funding for your deals. So in addition to having access to private money lenders and the bank and stuff like that, why not take some of the money you're making, the money you're saving, start funding and capitalizing your own private banking system so that when you need access to funds, you can borrow against your policy, make that investment. I mean, heck, would you rather pay 5.5% on a policy loan than borrowing from me at 12%? I mean, in some cases that makes sense. Sometimes it doesn't. It just, it depends on your situation, but it's something to think about, right? So business owners, real estate investors, high income earners, just in general, if you're saving money, if you're able to consistently save money on a regular basis, and you want to accelerate the wealth building process in your life by putting your safe money, your emergency and opportunity money in the most efficient vehicle possible, infinite banking is probably a good fit for you. Might not be, but it's worth at least exploring, at least learning more about, like, how do these policies actually work? How do we design them? What are all the benefits here? Does it make sense for my situation, right? So if that piques your interest, guys, I would encourage you to check out my bio or links in the description, wherever you're watching this, and request I have a free Infinite Banking Masterclass that you can check out. And it goes into a lot more detail. And let's have a conversation, book a call, and we'll talk about your situation, what your goals are, what your current finances look like, and see if it makes sense, because these things are incredibly powerful. The last thing that I wanted to mention too, I kind of alluded to it earlier, was what this also does is eliminates lost opportunity costs. I think that's one of the biggest expenses in our lives, aside from maybe taxes and inflation. But I suppose there's a compound effect to that. There is a compound effect to lost opportunity costs. And if we just change where we put our money first and how we make these purchases, like buying a vehicle, for example, it can make such a world of difference, guys. Like again, just real quick to wrap up, when I purchased my vehicle, I paid cash, but I didn't use my own cash. I borrowed from my policy. So I put my cash into the policy first to get all the benefits, right? And then I borrowed the life insurance company's money, took a policy loan, 5.5%, paid cash for the vehicle. But my money is still growing in the policy. I use the life insurance company's money. When you run the numbers on this, it is mind-boggling how much money, how much wealth that puts back into our finances over our lifetime. So if you pull up an compound interest calculator and type in 28%, $28,000, that's what I paid for my vehicle, $28,000 is the initial investment, whatever, over 40 years at 4%. Because again, these policies get 3 to 5%. So just use the middle there. In 40 years, that $28,000 turns into $134,000. So if I used my own cash, would the car have only cost me $28,000? Or did it actually cost me $134,000 over 40 years, over 50 years, 60 years? I plan on living to at least 90. Right? Over 40 years, that would take me to 76. So we're being conservative with those numbers, right? And think about how many cars we purchase over our lifetime. And, the argument would be, yeah, but, you pay cash, you're saving money on interest. And that's true to some extent. But again, what's the cost of doing that? And do the costs outweigh the benefits? If not, then do it, then pay cash. But when you actually look at the true cost of paying cash for it, it's pretty devastating. Even when you finance it, when you finance a vehicle. Now, again, every situation is different. If interest rates are really low and I want to buy a vehicle and it's going to be 3% versus maybe 5% on my policy loan, well, I'm probably going to go with the bank financing and use my policy to build wealth. You're not building wealth by buying vehicles. You're preserving some wealth. You're putting some wealth back into your life, right? But that's not the only thing that we want to use our policies for. See, when I borrowed against my policy to purchase my vehicle, I still had plenty of cash value left to make my investments, right? So I didn't tap out my life insurance policy just to buy the vehicle. Again, I think it makes sense to do that now anyways, though, because interest rates are so high and, you have a lot of flexibility. I don't have to worry about anybody repossessing my vehicle if I don't make a payment, right? So there's a lot of benefits to that as well. But eliminating the lost opportunity cost by simply putting our money in a vehicle that's going to get uninterrupted compound growth while providing liquidity and access to that money to make a large capital purchase, to make investments, whatever. It's really powerful. It's really powerful stuff. So here's what I'll finish up with, guys, is just do your research. Learn about how these different things work. Learn how buy, term, and invest the difference works. Learn how 401ks work. Learn how the market works. Wherever you're putting your money, learn how it works. Learn your different options for building wealth so that you can make the best decision for you. Learn about infinite banking. Learn about dividend paying whole life insurance, and then make a decision, right? So I hope this was helpful, guys. If you have any questions, drop some comments down below or send me a message wherever you're watching this. And I will talk to you in the next one. Cheers, success. Matty Ice is out.